Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to another live stream. So today we're going to be talking about one of the most fundamental positive bullish factors in favor of silver at the moment in the world, and that is the flow of silver from west to east. And China and India, as well as BRICS nations, accumulating large amounts of physical silver. And I want to talk about, first some of the numbers. How much silver are they actually importing from the West, and what kind of an impact is that having? But also what that could potentially mean for the silver price moving forward, and the potential of the entire paper silver market in the West to really lose its importance, and with it, the ability of financial interests to manipulate the prices of precious metals. So let's start off with this story from the Jerusalem Post titled, "China's Strategic Silver Takeover, a Calculated Move to Drain the West." They say here, China is hoarding silver. The price is 10% higher than in the West. Is this a secret weapon or an economic warfare? So let's delve right into here what they're telling us in this story here. So to start things off, the story indicates that China, through a series of calculated moves, has been quietly accumulating vast quantities of gold and silver. Well, we know that this is true in terms of gold. You can look at this data from the World Gold Council regarding net purchases of gold in 2023, and you can see China was far and away the biggest purchaser of gold last year. Now, they did buy a lot in Q1 of this year as well. Officially, they have stopped in Q2, although, I think we got to take that with a grain of salt. But they've certainly been accumulating precious metals, and they're also a net importer of silver. We'll talk about the numbers here in just a moment, how much they are importing. But I want to talk about the next point in this article, because this is really critical. It's about the Shanghai Metals Exchange, where we have seen a surge in silver trading volume, and also where the prices of silver are drastically higher than they are here in the West in a very big way. So we'll take a look at that here before we go any further. And also, today's video is brought to you by SDBullion.com. If you'd like to buy some gold or silver, especially if you're a new customer, make sure you check out SDBullion.com/new, where you can get gold or silver at spot. That's where I buy my gold and silver. You can check them out with the link down in the description. Now, let's see. This is the Shanghai Metals Exchange, or the Shanghai Gold Exchange is the actual name, the SGE, where their silver is traded as well. And you can see the most recent price here that they've got for silver is 7,470 Chinese yuan. So what we need to do to determine what that is in US dollars is we've got to divide that, because this is per kilogram. So there's 32.15 troy ounces in a kilogram. So that is about 232 Chinese yuan, a little more actually, per troy ounce of silver. And if we do the conversion here just using Google's built-in currency converter, you can see that's about $32.72 per troy ounce. Now, right now, silver was in a little bit of a dip today. I think it's right around 29 bucks, and spot price is right at 29 right now. So this is trading significantly higher. That's I think over 10% premium on the Shanghai Gold Exchange for silver. And 32.72, that price, silver hasn't traded that high in the West in over a decade. We've gotten close. Recently in May, we got up to about 32.50, but 32.72 is higher than silver has traded in the West in over a decade. And that's what it's trading for right now in China. Now, that creates an arbitrage opportunity. Now, China does charge actually a tariff or a tax on imported silver. I think it's about 13%. But that means that anytime this premium goes above 13%, there is a huge incentive for arbitrage of import of gold, or rather silver, into China from Western vaults. And that's exactly what we've been seeing. This is the LBMA vault data you can see that this data goes back to 2017, and over the course of that many years, we've seen an increase in the vault totals of gold. But silver, the level of silver in the LBMA vaults has dipped precipitously, and part of this has to do with the flow of silver out of Western vaults and into the East. But let's move on with this story here. Now, one thing they point out, which I think is kind of a weird data point that they point out, they talk about silver reserves here. Say in 2023, China reportedly had silver reserves of 71,000 metric tons, second only to the silver producing powerhouse country of Peru. The U.S. came in 7th on the list, and then they named some of the other nations here. But silver reserves, what they're referring to here is actually silver in the ground. So it's important to note that that's not, silver that's like sitting in a vault somewhere. This is how much silver the countries have that can be economically mined. And the U.S. is fairly low on the list here. The numbers here from Statista are a little bit different than what's being reported in that article, but sources may vary, in the way that you calculate reserves is perhaps, a little different from source to source. But you can see Russia in the number 3 spot and China in the number 4 spot. So they do have large reserves there, and they do produce a lot of silver in China. China is actually the number 1 gold producer in the world, and they produce a significant amount of silver as well, but they do import both metals. Now, moving on here to the demand for silver. So China is leading the way in solar production, and they are, maybe producing more panels that can be put to use. There is potentially a glut in the Chinese solar panel market. Part of that has to do with subsidies and government policies. They're trying to dominate the solar market, basically by putting everybody else out of business, by driving the cost of solar panels down by producing a lot of them. But they are producing huge quantities of solar panels in China. In fact, last year they installed more solar capacity in China than the U.S. has installed in its entire history. So, that gives you an idea of how much solar they're building over there. And solar requires huge amounts of silver, especially the newer technologies actually require more silver than previous iterations. They're more efficient, they produce more power, but they do use a lot of silver. So they say here that the imports reached a high of 390 tons back in December. That was a 3-year high. The monthly 5-year average of imports is 310 tons. So those are metric tons. And in order to determine how many troy ounces that is, you got to convert metric tons to troy ounces. So you got to multiply by 32,150. And if we do that, that means that China's average imports is almost 10 million troy ounces of silver. If you annualize that, that's 120 million ounces of silver. That's more than 10% of annual production from mining and from recycling worldwide. So they're importing a huge amount of silver into China every month. And this means that the amount in the West is declining, right? The whole silver market, the amount of silver everywhere is declining above ground because more of it is being consumed right now. But a lot of silver is flowing into China as well. So, this could mean that vaults in the U.S. continue to, and also in, other Western places like London, continue to decline. Now, the article mentions India is a major buyer of silver. We'll talk about that in just a moment. But also the potential for a silver squeeze. So this is interesting. I think of the silver squeeze thing, when everybody first heard that in 2021, they got very excited. They thought, the manipulation is going to come to an end. It didn't pan out that way in 2021. So I think it kind of, lost its attention. People have very short attention spans these days when it comes to this sort of thing. I've been stacking all along. I know many of you have as well. And I still think there's a potential for a silver squeeze. One of the main contributors could be the fact that China is importing large amounts of this metal. So a silver squeeze would mean a short squeeze, basically. So those who have these short positions in silver, if they are forced to cover those shorts because of a skyrocketing price, then that could put the whole silver market into a tailspin. It could mean that the paper price no longer matters. Now, we know that this is possible. because, for one thing, there's a huge short position in silver. Lots of shorts exist, but also we have witnessed this in the metals market just over the past couple of years in other commodities markets, in nickel, for example. So in 2022, following the invasion of Ukraine by Russia, there was a lot of concern that global nickel prices could skyrocket. Russia produces a lot of nickel. And one of the fallouts, one of the outcomes of that invasion and the subsequent turmoil was that the paper nickel market on the LME actually had to be halted. They had to stop trading there, basically shut the whole market down because there was a 250% spike in the price of nickel in a very short period of time. Now, the difference is that everybody who had the long positions in nickel in that instance basically just got screwed because they shut down the market. You couldn't close your position out. You couldn't settle it. You had to wait. They opened it back up in like a tiered way to get the price to come back down. They were basically bailing out their buddies, a Chinese nickel magnate, Zhang Guangda, I believe was his name. He was the one who had these concentrated short positions. The difference is that with silver, you can actually hold physical silver in your possession. So in the event that the silver paper market were halted, that basically would mean that the silver manipulation, which occurs in the paper market, would come to an end, and we might actually see real price discovery in silver. Now, silver is a tremendously undervalued asset. If you compare it to previous highs, especially when you adjust them for inflation, it is a fraction of those previous highs. You've got gold taking out record all-time nominal highs. Silver is still down, close to half of its previous nominal highs. Forget the inflation-adjusted high, which is like over $200. Silver's down under 30 right now. So silver's incredibly cheap. And a lot of that, I know many of you attribute that to manipulation, but in an event like this, that manipulation would be over. And it's not just China that is importing this metal. India is also importing a huge amount of the metal. This is from last week. India's silver imports to double on demand for solar and investment. According to Reuters, India's silver imports are on course to nearly double this year due to rising demand from solar panels and electronics makers. India imported 3,625 metric tons of the white metal last year, but this year, those purchases could rise to 6,500 to 7,000 tons. Now, if we do the same thing that we did with the Chinese numbers there, let's say they go to 6,500 tons, you got to multiply that by 32,150, and that gives you 208 million troy ounces. So if you've got 120 million going to China and 200 plus million going to India, that doesn't really leave a lot for the rest of the world. That's more than 30% of global production being imported. That's just what's being imported. Keep in mind that China is, producing metal in addition to that they're consuming. So, this gives you an idea of how much the industrial demand for silver is rising, and also in India, it's investment demand. They're a culture that really understands metals as money. They have a long tradition of stacking silver and gold as a store of value, and that is also contributing to the large amounts of silver being imported by India. Now, this is an interesting story also from the Jerusalem Post about how China is now buying silver directly from South America. So what this is referring to is that they are now importing raw silver from miners, and they're refining it themselves. So it says here, China is buying unrefined silver concentrate from Latin American refiners and miners, effectively laying claim to Latin American silver before it is refined. This tactic allows China to secure silver at higher prices without directly affecting the spot market, crowding out Western buyers and raising concerns about future supply and price stability. So they're setting up these direct lines to the producers, ensuring that they are first in the supply chain. They will have access to this. And, this is something that, as the real issues with silver supply and demand imbalance become manifest and the industrial demand continues to rise, I don't think it's just going to be China that is going directly to the miners to secure supply. You will probably see a Samsung, Tesla, any of these companies that produce high-tech electronics that require large inputs of silver, they will simply set up deals with miners directly to get this stuff so that they have what they need to make their products. Now that means that the rest of us, might be out of luck when it comes to getting physical silver. And it also means, as the supply declines and more of it is consumed by these various projects, electronics consumption, investment by nation states, etc., the spot price for physical silver, I should not say the spot price, just the price of physical silver, because the spot price is inherently, a paper market. It could rise drastically absent a functioning paper market, which is the sort of thing that this really risks. And, it's not just because of their need to make solar panels and electronics in China. That's not the only reason that they are importing this stuff. It's also because of the ongoing trend of de-dollarization. I mean, this is an article from just 3 days ago from Reuters about how last week the United States imposed sanctions on more than 400 entities and individuals for supporting Russia's war effort in Ukraine, including Chinese companies that U.S. officials say help Moscow skirt Western sanctions and build up its military. So China understands that it is in the crosshairs of Western sanctions here. And a lot of this has to do with their relationship with Russia, but also I believe the West wants to isolate China and undermine them, keep them from becoming more powerful than the West. And one of China's ways of responding is acquiring huge amounts of gold. Again, the biggest buyer in 2023 and continuing to stack very likely, but also silver. Silver has a long history in Asia and in China specifically as money. For hundreds of years, silver was the de facto currency in China, and I think that they understand that that's another way for them to de-dollarize and to get into these hard assets without counterparty risks, the kind of assets that can't be sanctioned. Yes, gold is great for that, but silver also, and silver has the added benefit that you can, do things with it in industry, and it is in very high demand. So anyway, China is going to continue to accumulate large amounts of silver, it looks like, for the foreseeable future. And the impact on Western markets could be significant. Now, this is not like silver's going to skyrocket tomorrow because of China, buying it. However, it does mean that over the next several years, or potentially the next decade, you could see a continued imbalance in the supply and demand fundamentals for silver that ultimately will lead to even potentially a massive repricing and an undermining of the paper silver markets. So let me know what you think in the comments down below about China's accumulation of physical metal. How do you think that will impact the supply and the price of silver moving forward? To me, I think it's a pretty compelling reason to continue to acquire physical metal. I mean, of course, none of this is financial advice. That's just what I'm doing. But I would love to hear what all of you have to say. So leave me a comment down below to let me know what you think. Thanks for watching, everybody. Stay safe and happy